I'm with Edmund Shing, Head of European Equity Strategy at Barclays Capital. Good to see you, Edmund. What are you expecting today from this meeting?
Well, I think we shouldn't go too far in expecting wonderful proposals by the various heads of the EU. Let's face it, they've had two bites of the cherry, failed miserably, I would say, twice, and that's why bond vigilantes have taken out the shotgun and put it about there. I mean, that's where we are today. I think we will get some movement. Clearly, there are two issues now to solve, not just the Greek crisis, which is the same problem we had the first two times. I think we will come with a concrete proposal this time, and certainly Angela Merkel and President Sarkozy are militating for that.
Involving private bondholders?
To some degree, but to a lesser degree than, of course, Angela Merkel wanted initially. So I think very much we have to be very clear about this. It is the European public sector, it is the ECB as well, who will be taking the brunt of this. So it will be EU taxpayers. They won't tell us that. That will be the reality. And I think, secondly, it's all about contagion. You know, we now have to face up to Italy and Spain and say, well, because we screwed up on Greece, we now have the second issue. We have to figure out a mechanism where we can avoid contagion in future.
Well, we talked about avoiding contagion and contagion spreading. Contagion is all very much here,
Absolutely.
isn't it? But to what degree, how much worry should we be feeling?
Oh, I think we should. I mean, we are at the precipice. We're at the edge of the precipice, staring down into the abyss. I mean, in Europe, this is all about the future of the euro. This is not just about. It's not just about Greece anymore. This is, will the euro be here in 3 years' time?
Yeah, Edmund, the euro is remarkably resilient, hanging around 141, 142. What's propping it up? We're all going to hell in a handcart if we listen to you and a lot of other people that are commentating on this. And really, you think to yourself, oh, come on, 130, 125 maybe.
Well, yes, but the problem is we're all looking at the euro-dollar, and I think when you look at the euro-dollar, it's a pair. And the problem is, you're looking at two very ugly sisters right now. The euro, you're right, doesn't look great. I mean, let's be honest, but the dollar doesn't look any better. I mean, you have the Federal Reserve, who resiliently decided not to raise interest rates. Core inflation is on the up in the US. The economy is sort of weakish, which suggests that the Federal Reserve can stay on pat for a very long time. So what's helping the dollar here? Not a lot. We haven't even got any agreement on the debt ceiling yet.
And how crucial is that to where we're going in that sort of in the sentiment terms and as well as the currency terms?
Well, I think, look, we will get an agreement on the debt ceiling one way or the other by the 2nd of August. That much is clear. But this is typical. We always have to wait for the 11th hour before the Republicans and the Democrats come to any sort of agreement. And it's certainly, even if they do decide on a deficit reduction package of even as much as $4 trillion over the next 10 years, let's be honest, that will not be the end of the story. That's more the beginning of the story on how the US tackles its debt issue.
Now, we were talking to John Taylor, one of the biggest currency hedge funds, earlier. He was very, very bearish indeed, and saying he expects America to be back in recession within 12, 18 months. Do you?
No. I think we at Barcap take a more optimistic view on US growth. I think certainly we've had a slow patch. Certainly unemployment is not where anyone would like it to be, at over 9%. But I think we should not go too far and decide that unemployment will never improve in the US. I think employment growth is there. It's slow, but it's there. And we as a House do believe that it can pick up progressively through the rest of this year.
He also predicted euro-dollar parity.
Yeah, well, I mean, again, it's a bit difficult to say on the one hand the US economy is going to hell in a handcart, but on the other hand saying, but the euro is going to it's just, I'm sorry, the euro is going to weaken that much against the dollar. That's, according to his forecast, will be very weak. Doesn't really make a lot of sense to me.
Looking on to commodities, and you know, we've got the austerity happening across the world, and that's helping to push commodity prices down. What's the outlook as far as you're concerned?
Well, I think you've got to look at the short term and the longer term as two separate areas. I mean, for instance, let's take agriculture. If you look at agricultural prices, it's quite possible that agricultural prices, like grain prices, could fall to some degree over the next few months if, for instance, the US crop yield turns out to be better than expected. Because remember, we had a lot of rain in the Midwest not so long ago. There were predictions that we would have shortfalls in crop yield in the US. Actually, things have got a lot better. So that may actually help. You know, you have more crop, and of course that helps push the price down in the short term. But structurally, I think whether you look at grain or whether you look at energy, I think the two big areas which are fueling inflation right now, we still see structural upside. Because again, if you believe in emerging market demand continuing to grow, the emergence of the middle classes in the emerging markets, you have to say, well, where is that going to be best expressed? And it's going to be best expressed, in our view, in rising energy demand in emerging markets and also rising food demand.
And where do you go to safety? We see gold again on the rise. Where do you see that going? 2,000?
No, I mean, I think you would be surprised how quickly that can turn around. We have...
Hasn't for a few years.
No, that's true. But I think we have had very much a risk-off, run from contagion, affecting both the gold price and also, of course, the Swiss franc. And these are getting incredibly strong, way beyond any fundamentals that we can judge on. I think if we get any sort of good news in Europe, if we can judge that the US is not going to go back into recession and world growth will be okay-ish, then actually we could see some retracement in both those.
Edmund Shing, really good to talk to you.